Hello, investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. This is a one-year daily candle chart of the Dow Jones Industrial Average ETF, ticker symbol DIA. And if you've been following along with the market guys long enough, you'll know that I leave my lines on the chart from last week's forecast so you can see just how accurate candle charting is as a forecasting tool. This diagonal line is what I drew, and I said that from last Friday we would most likely see lower prices, and the end of that line was my target. As you can see, on Thursday we came within pennies of that low, and today we're closing the market with what's called a doji. That's a sign of indecision that's usually found at pivot points, and you can see it flashing because I'm starting to record this just 3 minutes before the market closes. Now, what does this mean for next week? Well, I do believe that because of that sign of indecision, we're going to continue lower. I don't think we're going to have a major sell-off at all, but this coming Monday is the Memorial Day weekend celebration, and that means that next week we're going to have a shortened trading week with only 4 days in there. So with the beginning of the summer, as it approaches, we start to reach the summer doldrums, and a lot of people actually sell their positions, and many times they'll go away for a vacation or a holiday. You may have heard the old saying, sell in May and go away. Well, I think that could actually happen right up until the end of this month, and then we'll have to see where the market finds its support. So that's my forecast for next week. If you look at the spiders, that's the ticker symbol for the S&P 500, that's SPY, you'll see that we hit resistance. Again, this is the line that I drew a couple of weeks ago. We hit resistance on Tuesday, and we had a bearish engulfing pattern right there as we pulled back from that resistance point. So I think that that resistance is going to hold. So we came back a little bit. We pulled back earlier in the week, but I'm going to move this whole thing over just a notch in the same angle. I think we're going to continue lower into the shortened trading week next week. I'll erase this line and just leave that in place. So I'm still projecting lower prices. And if you're long any positions, I would just encourage you to protect those positions with either options, stop loss orders, or setting alerts for a point when it starts breaking down below support. Good risk management technique is going to be needed here when we start to get into those summer doldrums, like I said. Now, with the spiders, I'm going to pair this up with the volatility index. The VIX is a leading indicator that we use, and it's a contrarian indicator to the S&P. And you can see today, as I record this, we are showing a bullish engulfing pattern for the VIX. Now remember, last week I said the VIX would go up with the end of that line being my target. We came within pennies of that target on Wednesday, and then again we have this bullish engulfing pattern. So what does that mean? I think the VIX is going to rally right up to these highs right here, and that is going to be bearish for the S&P. The VIX is one of the main reasons why I think the general markets are going to drop, because I did notice that bullish engulfing pattern earlier today. Okay, let's move on to a more broad-based index, and that's the Russell 2000. Market did not pull back as much as I thought. It did pull back, but not all the way. So I'm just going to project this out and match the angle and even my target price. I'm just going to put that just like that. I think that the general markets are going to pull back to this support level, which happens to be a roll reversal support level. I'll talk about that in a little bit. I'll show you a video where you can learn more about that. So I'm going to erase this line, again, keeping my target in place for next week, maybe even beyond into the week after next. So that's for the Russell 2000. If you look at the Qs, that's the NASDAQ market. We pulled back on Wednesday. Then, interestingly enough, look at that. We had a bullish engulfing pattern that caused a rally on Thursday and Friday. Now, what does this mean? if we have a spinning top and a doji side by side. Well, look at this. Last time we hit this resistance level, we had almost a doji and a spinning top right there. And if you go back and look at what happens when we see spinning tops, you look back here even into January, you see that usually those spinning tops and dojis, which again are signs of indecision, they generally show up at pivot points. So I think that the NASDAQ is going to also drop with the rest of the markets. So as I mentioned, we have videos on our Market Guy library page. Just go to themarketguys.com, click on the video tab right there, and I'd like to direct your attention to the role reversal, which is what I mentioned earlier. That video is right here. It's about 6 to 7 minutes long. It'll not only teach you how to draw a role reversal line, but it'll teach you the significance and how to use it as a tool to pick your target prices, whether you're getting in or out of a particular position. So I want to thank you for joining us. For those celebrating Memorial Day, have a great long weekend, and we will speak with you soon. So long.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.